Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there in age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Hey everyone, welcome back to the channel. So today I want to talk about the scary part of investing. And when it comes to investing, I'm talking specifically about real estate investing. Now, I'm going to go over the pros and cons of real estate investing, but we're going to start off with what I would consider the negatives, right? Now, we have assets and we have liabilities. If you want to go with the Robert Kiyosaki reference, is an asset is what makes you money. Liability is anything that takes money from you. Now, in this case, I have two properties. One is rented out completely by a long-term tenant, and the second is also rented out, but I also live there and rent by the room. So both of these properties for me are considered assets, where essentially I actually don't have to add my active income to the pie in order to pay the monthly payments on these properties. But I do use my active income to pay down the principal balance additionally on these properties in order to essentially just have more financial flexibility and financial freedom. Now, some people would say that me paying down my mortgages is actually not beneficial to me because both of them are less than 3%. One of my mortgages is at 2.625% and the other is at 2.99%. Obviously, it is far less than the rate of inflation. Obviously, it is far less than what I stand to make in the stock market with 18 to 20+% returns that you have seen in my portfolio. However, I still put some money towards this because it is a guaranteed way of increasing my net worth. It is also a guaranteed way of reducing debt. And it is also just a way to kind of relieve the financial burden should I pass off these properties to my significant other or family members. They just have less to worry about. And so that's what I really think about when I put my principal to work in that manner. Is it making me the most money possible that I would make investing in the stock market? No. But I do pay down the principal because I just absolutely want to. And there's nothing wrong with that. So the title of this video was going to be 300,000 in debt. Something to that extent. But after I actually crunched the numbers, I was, I wouldn't say happy with the outcome, but I expected it to be around 300,000. And so after crunching the numbers, at the making of this video, it's actually going to be lower because by the time this video comes out, it will be in September. So right now at the making of this video, we're at $287,261.54. The reason I said it will be lower is because by the time it comes out, I'll be paying September's mortgage payments on 2 properties. On top of that, I'm going to add some principal pay down to that as well. And it's probably going to go down like $1,100 to $1,200. So you can expect it to be about $286,000 flat by next month. Now, you know, I actually do like these numbers for more than one reason, because when I talk about credit card debt, I say if you don't have the money to pay it off completely, you should not, you know, be spending money on that credit card. And the reason why I say that is because you can incur additional interest. And credit card interest rates are 20, 27, 15%. In this case, you know, I do have the money to pay off both of these mortgages. The problem with that, though, is that it's not just my savings account that would be affected. It would also be my investment accounts, so my stocks. I would have to actually sell off stocks to pay this off, which I don't want to do. So in some people may say, well, if you have to go into your other investments to pay it off, maybe you don't have the financial capacity for it. But in reality, I do have the money again to pay it off without digging into my like retirement accounts, like my Roth IRA, 401k, things like that. I think those are the only things that I don't really talk about on this video too much, is like my retirement accounts, because it just takes so much to kind of access it. So I show you like my personal investment accounts and my personal savings accounts and things like that. But I never really dive too deep into my 401k, Roth IRA, and things like that. But yeah, with saving, with stock market investing, this can easily be eradicated. Now, why don't I just pay it off right now? Well, for the same reasons that I kind of addressed earlier in the video. Now, I do not do this with credit cards because that's just idiotic. I've never ever had a late credit card payment, nor have I ever owed money on a credit card. So I've never actually incurred interest on a credit card. But in this case of real estate investing, it is an asset. It's not a liability. It's not like, oh, this is my primary residence, I just have to pay it off because I'm losing money every single month. Well, the truth is I'm not losing any money any single month. In fact, it's almost as if I'm living in my parents' house rent-free. You understand? And so essentially I get a boost to my net worth every single month, and I really don't have to do anything. So I have long-term tenants in the other property, long-term tenants in this one as well. So I really don't have any turnover whatsoever, and I don't really have the stress of even thinking in that direction just yet. I'm not saying that I won't get there to where I want to do that, but I just haven't essentially been there at this time. And so I think it's almost a comfortability for me to just say, yeah, let it keep getting knocked down, because it's not going up, right? And I am paying extra on it every single month, so it is getting lowered more significantly. You know, I've had these properties now for about 3 years, and you know, I've paid well more than 2-3 years on top of that payment. So these are probably like 25-24 year mortgages remaining on them right now, and one might be a 20-year mortgage. The very first one that I purchased might actually be at like a 20-year right now. So yeah, they are getting hit pretty hard. And again, this is the combination of both of them combined. So most people, the average house costs about $400,000 in America today. So to have two and it be under 300,000 remaining on them is not bad, I would say, right? Think about the equity in the homes as well, right? So like if I wasn't a real estate investor, I could easily sell off one of my properties with all the equity it has and literally just pay off the other one. I wouldn't have to touch my savings, wouldn't have to touch my stock market investments. I could literally just sell off one of the other properties and pay off the other one. That is what I call amazing. And to be honest, I'm actually thinking of adding more debt. And so this is where me and Dave Ramsey kind of differ in a way, because I am looking at certain properties right now, especially with interest rates about to come down a little bit. And I'm like, I can probably use that as a short-term rental, or I can probably turn that into a nice duplex. And so I'm looking at increasing that debt to somewhere around like 500,000. You know, but you know, as long as it pays for itself and does exactly what I need it to do. And so that's me crunching those numbers. That's me being really savvy and analytical about it and saying, okay, this is what we're going to do. This is how we're going to get there. And we're going to make things work and make things shake in our favor. But I do want to address this because, it's not often that someone who's talking finance also goes over their finances with you. A lot of the times you guys see how much the person is earning monthly, how much the person is able to do and the lifestyle that they're living, but you don't necessarily see the other side of things. And I don't have any student loans, I don't have any credit card debt, I don't have any medical debt or anything in between. I don't have any car loans or anything else. And so this is it. That is everything right there. So when you look at that, it's kind of indicative of all debts that I've accrued, which is just the 2 mortgages once again. So from that perspective, it's very simple for me to just look at that and say, okay, I can focus in or hone in on that. And life isn't always that simple, right? So that's another thing. Life could get more complicated, and that might force me to really start to reevaluate certain things. But right now, because life is so simple, I'm able to say, you know what? Let me just continue to chip away at that while I do everything else that's making me more money. Investing. Not necessarily saving, but right now, a certificate of deposit is like 5%. And like I said, my interest is under 3%. So I could put my money in a certificate of deposit and make more than I would paying off debt, right? Like, make it make sense. Like, if the world was like that, if credit card debt, if everything was like that, most people probably wouldn't pay it off, and it would actually be good financial advice. We were just in a time where interest rates were so historically low that it just made sense to just not pay off anything. And so, this is not traditional. It is not normal to think in this manner, but it is financially smart for the circumstance. I'm not saying that is the best move possible because, again, there are some cons to it, right? The financial burden, the financial stress, if there is stress to you. And a lot of the times, a lot of real estate investors don't talk about this, but especially in the beginning, there's a ton of stress. In the beginning, there's a ton of stress. The first couple of monthly payments that you have to make on hundreds of thousands of dollars is very stressful. But over time, you kind of, your shoulders get a little bit stronger. You start to feel like, you know what? It's not too bad. I can lift this. And over time, you start lifting it. It gets lighter. You've been in the gym, and you can handle that weight. And so now you're looking at more weight to put on top of it, because you can bench a little bit more. And so that's what I'm doing now. I'm like, I can put an extra 300,000 on this right now. Put it at 580, because I know I can lift that. And it might feel tough and tight for another couple of months, 6 months to a year. But afterwards, it just gets a little easier to lift. And, it's not just about accumulating debt, right? Robert Kiyosaki said he has over $1 billion of debt. So you can only imagine how much his net worth actually is, right? Because if you have $1 billion in debt, you have to have at least $1.4 billion in net worth, right? Like, you have to have that much. So when I say I have almost nearly 300,000 in mortgage loans, you might have to assume what's that net worth looking like? What's that net worth hitting for right now? Because that'll tell you a lot. That'll tell you a lot just off of how much I'm carrying versus how much I own, right, of that asset. And so that's another thing that people don't really pay attention to. Wait. No one is underwater on a house right now that is functioning. A functioning house in a functioning neighborhood cannot be underwater in this economy. Everything is going for over asking still to this day. Housing prices are still increasing at a 4% rate. And yes, there are going to be some places in the world where it is not increasing, but the overall U.S. housing market is still increasing at a 4% rate month over month, which means the majority of U.S. housing is increasing by 4%. So people are not underwater. People are still very much above water and can sell for a huge profit. And right now, where I live, yeah, it's very profitable. So, like I said, I bought over 3 years ago. And because I didn't sell within the last 3 years, all that increase, all that real estate appreciation, I've been able to actually hold on to that. And, if I wanted to reap the benefits of that, I can absolutely sell and reap the benefits of that. So, the next property I buy probably won't have a 10% increase like these other properties that I had purchased in the past did. And so that will be the real test as an investor when you have to deal with a slower economy and a slower housing market. But at the end of the day, any task that I put on myself, I'm built for. And so I just wanted to go over that with you guys. There's no secrets here. And I wanted you to know that if it's an asset, it's worth it. If it's a liability, you have to reevaluate your stance. Not everybody can have roommates and house hack a property, right? Some people have families. Some people have other responsibilities. Maybe you have to take care of your grandparents or your parents, right? So everyone's situation is different, and not everybody can do exactly as I do, but also just have the understanding so that maybe you can help someone else or help yourself in another way. Come up with an idea of how you can have this same situation or something similar. But if you like this video, leave a like, comment, and subscribe to the channel. I post every single day at 8 a.m. daily on YouTube, Rumble, and Spotify for podcasters. And I can't wait to see you in the next one. Peace.